Hello friends, a very warm welcome to my channel. In this video, we are going to analyze in brief the business model of Kalyan Jewellers and also talk about the growth outlook of the company in the near future. So as most of the people are talking about renewables, defense, railways, there are some traditional sectors like the jewelry sector also which are in a structural uptrend. So Kalyan Jewellers is one such company which is into this sector and has outperformed the market to a large extent and generated massive wealth for its shareholders even after the listing post IPO. So if you're new to the channel, please do subscribe and hit the bell icon. And if you're not a part of our Telegram channel, do join today by clicking the link in the description section so that you join the correct channel. Every day morning before the market opens, I'll share my insights about the market, which will help you manage your portfolios much better. So let's begin the analysis of Kalyan Jewellers. This will be the flow of the presentation. I'll keep it very crisp. I'll talk about the business model of the company in brief, then we'll look at the chart of the stock in the last 2, 3 years. We'll talk about the main financial parameters. We'll look at the reasons why the stock has given such returns. We'll talk about the outlook of the company in the near future. We'll look at the valuations at present. We'll talk about the possible risks of investing in this company and we'll form a view after understanding all these factors. So Kalyan Jewellers is a legacy business started 100 years ago, but this particular company was started in 1993. So they are the fourth generation into this business, and this brand or this group is one of the largest jewelers in India. They have presence pan India as well as they have expanded to Middle East also. And in India at present they have about 201 showrooms, and in Middle East they have 34 showrooms. They have 13 procurement centers in India. So in this kind of companies, what happens is the purchasing is centralized purchasing. So it is done in 13 procurement centers, and that inventory is distributed across the 200 showrooms which they have in India and the 34 showrooms abroad. Close to 11,500 people work for this company. If you look at the stock performance post IPO, it was in consolidation for some time, and thereafter, as the results improved, it gave a massive breakout, and right now it is trading at somewhere around 400 range. So technically on the chart is very strong, and there are no signs of weakness on the chart at all. When you talk about the revenue performance in the last 5 years, except the COVID year, which is FY21, there was a small dip. In FY20, the company did about 10,000 crores of revenue. From that level, it has come to close to 17,400 crores in the trailing 12 months. EBITDA has also shown a consistent increase from about 800 crores in FY20 to almost 1263 crores in the trailing 12 months, and there was a small dip in the COVID year. When we talk about the EBITDA margins, they are consistently ranging in between 7 to 8%. The margins in this business are not very high, but the ticket size of sale is large. So that's why the volumes or the size of transaction is very high in this business. The company earlier had quite a high amount of debt. That's why the return ratios are low. But going forward, we see that the debt is reducing. The company is focusing on deleveraging the balance sheet, and the return ratios are expected to improve from the present 12.7%. Inventory management is very critical in this business because it's a capital intensive business where most of the investment in this business goes to the inventory. So the more efficiently the company manages their inventory, the lower working capital is required and the return ratios and margins can be higher. Now, why did the stock outperform the market in the last few years is because this sector is in a structural uptrend. There are certain things happening in this sector, like people are moving from the unorganized retailers to the organized retailers. People prefer to have transparency in their purchase, prefer to have higher quality hallmarked jewelry. So the market share of the organized players is increasing, and people like Kalyan are benefiting from this trend. As the income levels of the people increase, more and more people end up buying more precious jewelry. So that trend we can observe in the rural sector, which is increasing the demand. And the government also wants to remove cash from the system by taking initiatives like demonetization, introducing GST, introduction of compulsory mentioning of the PAN number if they purchase more than 2 lakhs of jewelry, then usage of UPI transactions. So all these things also lead to higher purchase from the organized players rather than the cash segment. Now, this company, although it's a national or in fact an international players, has a hyper local approach. So when you go to a particular showroom of Kalyan Jewellers in a particular state, let's say South India, then the kind of look and feel you get is localized. The kind of jewelry you get is localized. When you go to North India, you will have a different feel catering to that region. So that is an approach which this company follows, which is different from the other companies. And growth you have observed has been consistent. The margins are intact, and the debt is going down. So improvement in fundamentals and overall tailwinds in the sector are the reasons why the stock has given such massive returns. Now, what is the growth outlook of the company going forward? They will increase their network of showrooms in India as well as abroad. They will add more products to their product range. They are creating sub brands within their main brand. They are focusing on e-commerce as well. So they are now focusing on a franchise model where the capital investment is less and the margins are higher. So they will generate free cash flows and reduce the debt from the balance sheet. So in India, they have signed more than 80 LOIs for the franchise model. And for their new brand or a sub brand called Candia, they have signed LOIs of 50 for the franchise model. Now let's talk about the valuations. The earnings multiple which the company is getting in the trailing 12 months is about 78, which is quite high compared to the growth which is there in the company. But the market believes that there is stability in the business, there is a structural uptrend in the industry. That is why this company is able to command such high valuations. And not to forget, there is a trust or a huge brand which this company has built. So that's why we have seen a re-rating has already happened in the valuations. So going forward, further re-rating from here can be very limited, and the growth in the share price is more related to the growth which is reflecting in the earnings. Now, what could go wrong if you invest in this business? This sector is also getting highly competitive. The unorganized players are also getting more organized, and there is competition increasing in the organized space as well. There are players bigger and smaller than Kalyan who are competing in the same areas where the Kalyan Jewellers has showrooms. Inventory management is the key because a lot of investment goes into inventory. If they mess up that, then the business can go for a toss. Internal control system in these kind of companies has to be strong because they are dealing with highly precious products which are susceptible to frauds. Overall slowdown in the economy can impact their business because the earnings of the people are impacted, then their purchasing power of such luxury items also get impacted. Right now, the company is reducing the debt, but if at all they change their strategy in the future, that could be a possible risk. And if the franchise model doesn't work out so well, that could be a risk of expanding this business. So now that we know the business model of the company, the growth prospect, the risks involved, the valuation part, what is our view on the stock? So as we have understood that the re-rating has already happened, but the growth is still intact in the company as well as the industry. So if you're holding the stock from the lower levels, you should continue to hold till the growth is visible. And if you're looking at a fresh entry at this point of time, the risk reward is not in your favor totally because the valuations are slightly expensive. So you should wait for dips and accumulate gradually. So that's about Kalyan Jewellers. I hope you like the crisp video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention the names of the stocks in the comment section. In fact, this video is also picked up from the names mentioned in the comment section only. Don't forget to join our Telegram channel. Thank you for watching and have a wonderful day.